Heather Bellini here with me at a great event hosted by Goldman Sachs, and we were just hearing from Janet Yellen. She sounds relatively bullish on the economy. We could have 3 rate hikes as soon as March. The dollar's moving. Headwinds for some of the key companies you look at, you analyze, Alphabet, Facebook. Are we going to see that as a headwind growing?
Yeah, I mean, that is a headwind for all major tech companies this year. For the companies I cover in particular, you mentioned some of them, whether it's Microsoft, Oracle, Facebook, or Google. Yes, it will be a headwind that we'll have to contend with. But having said that, that's been a headwind we've had to deal with for the last few years as well.
As the leader of the technology research group, I'm going to drill into some of the key companies you're looking at. And Alphabet, you've got some bullish stats on where this stock will go, up $130 or so. You see it hitting a price target of $970. What's the key catalyst for Google's growth?
I think the key catalyst for the growth is going to be the second half of this year. We expect that you're going to see net ad revenue growth start to accelerate on a year-over-year basis. We think there's a lot of momentum in mobile, and we think that's just really going to start paying off as you start to see prices start to increase for those ads to the advertisers.
So key parts of the business that they can start to expand into. It was interesting, on the recent quarterly call, we had Ruth Porat, CFO, saying, well, perhaps they couldn't do the buybacks in stock that they wanted to. Many therefore thought, is this because they want to make a big acquisition? Small or big, where would potentially an acquisition add to their firepower?
So we think a big area of focus for the company and for Sundar Pichai in particular, who's the CEO, is in the cloud, in enterprise cloud. So to us, it wouldn't be surprising for them to get aggressive and essentially enhance their enterprise DNA, if you will, in that arena.
How much could we talk? Do you ever hypothesize as to the maximum they should really be spending?
On the cloud?
Yeah, if they were going to be making some sort of purchase.
This is a $500 billion plus market, the public cloud market. There's 2 really large players today, Amazon, which my colleague Keith Terry covers, as well as Microsoft, which I cover, and there's no third. We think this is a market where there should be 3 players, if not more. Customers want a choice. They don't want to be locked into one platform. So if you were going to spend big, this would be the area, in our opinion, that you would do so.
Spending big is something that Ruth Porat's tried to rein back when it comes to the other businesses, some of the moonshots.
Right.
How does she rank 1 out of 10 in terms of managing to control that?
So we think she's done a phenomenal job since she's been there. I think it's been really hard for people to imagine that someone could come in to Alphabet or Google, if you will, and change the culture. And so I think they like to refer to it as cost optimization. And so it's obviously not like they're reducing heads, but it is a business where, as these very successful companies get bigger and bigger, there are ways that you could be more efficient with your spending. And she's done an excellent job just trying to make sure that the other bets, the projects that are included in that domain, are more accountable in terms of their revenue goals and their profit goals. So we would give her very high marks.
I'm going to flick to another coil company that you cover, Facebook, another company that is investing heavily, that is expenses on the rise. Are you happy with the way in which that they are putting their money to work?
It's hard to argue with how successful they've been and the decisions that Mark Zuckerberg and the team have made in terms of where to invest and how much. So I don't think anyone would complain in terms of the progress they've been making. Also, they tend to guide to a high expense growth rate, total expense growth rate, and usually come in at the low end, if not a little bit better. So also the way they've been conditioning the market to expect their expenses to roll through, I think they've done a very good job in managing that with the street, so that's been helpful. But there's a lot of areas, whether it's WhatsApp or Messenger or Instagram or virtual reality, where we think they're just scratching the surface, where they're trying to layer on the revenue opportunities 3, 5 years, 10 years down the road.
VR, is that more of a 10-year play? When does that actually start to crescendo and make some money for this business?
So he actually had some positive comments on their most recent earnings call related to it. So in a way, you've seen some disappointment in the standalone devices, the head-mounted displays that have sold, just because of the costs of buying the entire systems. But there's been a lot of success with some of the other companies where you could slide in your mobile phone and use that as the device to enable VR. So we think there's a lot of positive momentum, but to your point, this is a 10-year journey, but the more we meet with companies that are involved in this space, whether it's content for consumers or whether it's enterprise applications, we really don't have a doubt that it is a technology that is going to change the way we think about the world.
Talk to me about the way in which the landscape is changing for Facebook. Competitors are always out there, particularly competitive platforms. Any of them getting in on their space now?
So I think the most interesting thing is, a few years ago, I would argue the market was maybe even more competitive. When you think about digital advertising dollars, and if you look at the amount of incremental digital ad dollars that are getting spent each year, it used to be Google and Facebook would represent 45–50% of those incremental dollars that were shifting from traditional to digital. They now represent 75–80%. So on one hand, it's becoming less competitive, right, from that standpoint. But there are concerns over new platforms, but this market, the digital market, is growing double digits each year. You continue to see dollars shift. Facebook and Google capture more of them. The next big juggernaut for all of these companies to go after, and I think Facebook is no exception, is going to be that $70 billion, in the US, the TV market. And so I think there's just a lot of ways for them to continue to find avenues of growth coupled with the investments that we just talked about.
Will there be acquisitions for Facebook, do you think, in terms of getting into TV, or are they just focusing on the content in which they've already got their app?
It seems for now that they can do this on their own, so I'm not sure that this is a market that they need to go be aggressive and make an M&A announcement for.